Hello traders and welcome. This is the Euro US dollar on the daily chart, and wow, what a chart. Expect the unexpected is what I was always taught, and we certainly got that today. No hint that this was coming other than that we were getting some divergences down here on the RSI, and the 4 hour had certainly had divergences. I guess what you could say, when you've got a market that is where there's so many traders short and it takes so long, it's such a slow ebb to get down there, it shows the commitment, the real commitment wasn't there from traders. So there was a backlash once it started to trip stops, and that just accelerated that move. Could it have been traded? Yes, on the data 15 setup we talked about. Unfortunately I didn't do that. I did try and short it. When did I try and short it? I know, I tried to short it into the US session, and I tried to short it here just as it came into that resistance. So I started to get some pips and then it just reversed. Okay, so I did not do well on that. Excuse me. Okay, so where do we go from here? I would leave it. What tends to happen with a violent move like that is I would expect it to sort of shunt sideways and pull back a little bit. But eventually we might even see it, really sort of pushing up high. The only thing I could find like this was back in July 2013. Let me just find it. Here it is. We had this humongous, I think it was something like a 500 pip move here, July 2013, and we spent about 3 or 4 days just pulling back into support, and then it just inched up and then started to push up. So we could see that sort of episode going on here. Okay, so non-farm payroll tomorrow. It's possible, and I wouldn't sort of put any money on this unless you got the right setup. It's possible we could just boomerang right back down again if the non-farm payroll number is particularly good, or it doesn't matter what the number is. Just if the market decides it wants to sell the euro and buy the dollar, then that could. But in the meantime, I would just be very, very careful, and I would look at levels such as this. Let's think, that kind of level. Yeah. If I do that a little longer. So that is 825, 820, 825. Let's see if that works out. So in the meantime, I'm just avoiding it. I'm just not touching it. Right, quick look around the other markets. Of course, the dollar has seen this big bounce. So that's a buy signal. New low in the trend, and close above next day. So this is actually a buy signal in the pound US dollar. So I would just stick here. I'm going to wait until the US market opens, and half an hour into the US market and see where we are, because the volatility here is incredible. One thing I would say is, when it comes to the indices, this week in particular, the Dow has been much easier to trade than the DAX. The DAX has been, we had 100 pip 5-minute bars today, whereas this, if you look at the 5-minute chart on this was much easier, and it's been like this all week as well. The Dow's been much more favourable. So even if you hadn't traded the open, you got a gap fill down here. Can't remember the exact figure now, but you had a sell signal at the open, after the open, came down to fill the gap, dropped down to 610, pushed back into resistance area. If you look at the resistance from the previous session, and then we get these, you know, at least 2 legs down. We've still got a couple of hours to go, so this could even finish lower. Okay, it's just basic support and resistance. So that 732, 735 was a resistance area. Dropped underneath it. 620 was a resistance area. So we're getting nice legs to the downside based on support and resistance. Whereas the DAX has been much more difficult to trade. It purely from the point of view that the volatility has been so great. So that is quite some move. So where do we go from here on the DAX? Well, that is any pullback to 900, 920. 870 is a fib area, so that would be. Let me try and tidy this chart up. Let's take this channel off because it's not really doing us any favours anymore. So a big bar like that, I would look for. Yeah, like I said, pull back into that fib area there, which would be 875. May not get it. We've got the 50 EMA up there. We may just fade the 50 EMA at 800, 810. So stay tuned and let's see what we get. But like I said, the Dow is my preference at the moment, just because some of the ranges of these bars has just been incredible. All right. What else is there? Let's look at the US dollar CAD. Wow, that could go either way, couldn't it? So a close either side of that could give us a clue. Typical, you know, going flat to non-farm payroll. That's fairly typical, being indecisive like that. Pound yen. You can see I've got this box marked here. We're just in a massive box play. We're particularly this last week or so. So we're just chopping around in a box. So again, I'm just sitting on my hands here at the moment because this market can chop you up if you're not careful. The most consistent chart at the moment is the Dow to me. That's the easier chart to trade at the moment. Oil is all over the place. A big push higher. So the strength in the euro could benefit that. That's no buy signal though. All we've done is come back to resistance. So I would leave that. Okay, so to cut a long story short, let's look at the back to the indices a minute. Let's just look at the Ftse. Slammed into that 50% fibs at 64.44, and then we are very, very weak. So the strong pound is pushing that one down. Okay, so basically it's risk off. The euro US dollar was a carry trade situation, and that is now off. That's been reversed on the back of that move so far at the moment. So interesting how that Ftse has come into the weekly R1. So this is all the indices. This is probably the cleanest chart. The 62.84 is a nice move if we can get a pullback to that level. Okay, well, I do hope that helps. But just be warned that non-farm. Yeah, we had a volatile week already. Non-farm payroll is typically volatile anyway, so I am just leaving these markets alone until the US sets up and we get a clear idea of what is going on. Okay, I hope that helps. Your feedback is extremely welcome, and I will be around in the Skype room, but don't expect to hear too much of me because of the volatility we're seeing. Thanks very much, and bye for now.